Fellow traders, 'tis I, TheRumpledOne, coming to you on Friday, May the 16th. The year is 2025. Let's talk trading. Weekly wrap up. These videos are for educational purposes only. Your results may differ from mine. And as the week ends, just a reminder, always have your risk management in place. Never lose more than you're willing to lose on a single trade or during a single session. So let's look at the weekly. The dashboard shows we have 1, 2, 3, 4, 5 gaps that haven't filled. So it was kind of an interesting week there. And it looks like it's the Swiss franc pairs. 4 out of the 5 of those didn't fill, and the other one is the euro Australian dollar. Right now for the week, we've got the pound 24 pips above the weekly open. 78 off the high, 142 off the low, and we can see we definitely have a lower high, lower low for the week so far. We take a look at the monthly, 38 pips below the monthly open, 120 off the high, and 143 off the low. And the daily, you can see we broke out of the weekly opening range here today. We crossed above the monthly open, then turned right back around, and we're now below that monthly open, and we are inside the opening range for the week. And we remained inside the opening range for the month today. For the year, we are 772 pips above the yearly open. We're 1,183 above the low, and we are 161 below the high. We had an inside bar 7 days ago. We barely broke through the bottom, but now we're within that inside bar range. And that inside bar range is just about almost 100 pips, 132.80 to 133.79. And as you can see here, there wasn't too much inside bar action happening on the daily, weekly, and monthly. The range today, 59 pips, and we even had some red news today, just a few minutes ago. But we only have 4 pairs over 100. I think everybody's exhausted from the other days of the week. But that's just very anemic on the range. And you can see we crisscrossed that daily open here. Weekly opens down here. So basically we're in what I like to call no man's land, because you don't have a clear direction. You're below the daily but above the weekly. It's like, what are you supposed to do with that? But there's still pips to be made. I just be extra cautious. Range large enough. The green rats had a little nibble. I wouldn't call it a feast. But there were definitely pips to be had coming out of the rat zone. And just let me make a little observation about the rat zone. At this point in time, the range probably was not large enough, but that the high minus close and close minus open on the pound usually likes to be 10 pips or more, or at least 20 pips. And you can see the smart rat here is saying that's about a 12. And this one here, from here to here, is about 16. So you can see even though it hasn't pushed up high enough from the open to create a rat zone, when it starts to pull back, it might go for a while. So that's just something to note. You have to be cautious because it could just keep pushing up, pushing up. But you take your signals, you make sure you have your risk management in place, and you just might luck up and catch a 20 pip or more ride. Looking at the pivot trading plan, price near the pivot is long. Bambino flexes go long. We are went right through that pivot here. Was good for a couple of pips. We took out the daily pivot. We took out the weekly. And we've taken out the monthly. In and out of the upper wick zone on both sides. The daily, previous day's wick zone there. Range, 220 pips for the week puts us at the 58th percentile for the last 12 weeks. We did not break the high. We broke the low, previous week's low by 72. For the red rats, weekly red rats, high minus close 75, close minus low 145. Weekly crossover traders, high minus open 103, open minus low 118. Pips to be had going either way. Horizontal lines. And there was a trader earlier this week that asked me about horizontal lines. You know, at least on the pound, if you're trading, somewhere in the London or New York session, almost every day you're going to get a either a daily open crossover or a weekly open crossover. There might be some days you don't get any triggers there, but if you're patient or if you can't trade, sit in front of the screen all day, you could always put those trades on ahead of time. Just have a pending order sitting there and go for a few pips. Does it work all the time? No, because these videos are for educational purposes only, and your results may differ from mine. But you can see here, that daily open would have paid off a few pips each time. Yeah, move to the bottom, a move to the upside. But a lot of traders aren't willing just to take a couple of pips. They want bigger pips. But if you can 2 pip something every day, and you have something like a 98% win rate or something, those pips add up. They really do. And the thing is, it's, if you're trading a dime a pip, that's not much. But if you're trading $100 a pip, it can add up quickly. And I noticed here there was a gap, and you can see here price came up, came back down, filled the gap. You see these gaps, they usually get filled. You just wait for a nice trigger and you take it. Here we had a lower high trigger that paid off, about 7 pips it looks like. I see a flip-flop box here. This one right here, that would have paid off. Looks like about 4 to 5 pips. In fact, there's that flip-flop box there. Yeah, 5 pips. Okay, range so far this month, 263 pips. Year-to-date accumulated range has not changed. Let's take a look at the close minus open percent. 6.15, so we're still above 6. given back a little since April's close. Not much though. I should probably stick this down here so we can see. Let's take a look at the ATR percent. We're at 58. So we'll have to see if we can move that somewhat. Or move it somewhat. We don't really move it that much as retail traders. Okay, let's zoom out to the month. You can see here, lower high, higher low, inside bar. Price between the wick zones. In other words, it's in the body. Buyer's weak control. We look at the weekly. Price between the wick zone and the price is turning up. Even though we had a really big gap down. Or no. We had a gap. There's the close. There's the open. We had a gap down. But price was turning up. But you can look here. We've got lower highs. And lower lows. For the daily, it says sellers strong control at the moment. Higher high, higher low. And we've crossed below the previous mid and the pivot also. Take a look at the price action, put in a new 3-ball. Probably wants to go down to 75. It's so close. Expand out. 5-minute. Compress the data. Just watching the price action here. Looks like we could get a lower high on this candle. And if it closes positive on the candle, we will also have a flip-flop box. See, we got 10 seconds. See what happens. Doesn't look like it wants to go up. Inside bar here. I'm wondering, traders, when you are trading and you're looking at the chart, do you either say it out loud or say it, to yourself in your head, what's happening? Like I was just calling it out, like, inside bar, lower low, lower high, things like that. You say, gap down, dropping below. You'll say, you look to the left, what do you see? You can see, is it going to fill this imbalance right here? And a flip-flop to the downside. That was Bargo. I think Walmart likes to call those off. Okay, we gap down, filled the gap. So I'm curious if you traders do a play-by-play, like I said, either out loud talking to yourself or if you just say it in your head. Because sometimes when Walmart and I are trading, we'll, just say things that we see like gap down or higher high, higher low. But traders, I want you to always remember and never forget, it's not what you trade, It's how you trade it. So go out there and drain the banks. This is the rumpled one.